Hey guys, what's up? Welcome back. Hope you're all doing well. So as you can see, today we're talking about the new nationwide mortgage product called Helping Hand. Now before I get deep into the video, I just want to call out that basically I'm recording this video before the mortgage product is actually available. I think today's the 23rd. So obviously when you guys see it, like the product will be available, but I just wanted to give you the heads up that, I will be speaking in future tense. So just to avoid any confusion. In recording this video, I hope you want to be able to give you a more well-rounded picture about this mortgage product. So talk about obviously the pros, the advantages, what everyone's excited about, as well as some of the other things to take into consideration. So some things that may remove a bit of the hype and excitement about this, Helping Hand scheme. So to kick off this video, I just want to read a little snippet from the Guardian article, which goes into a little bit more detail about this scheme and what you can actually expect. So this is what the Guardian has to say. The UK's biggest building society is increasing the sums it is willing to lend first-time buyers, and a move it said would enable home ownership for many people who have been frozen out of the market. Nationwide will allow new buyers to take out loans worth up to 5.5 times their earnings and adjust the stress tests it does on applicants when assessing mortgage affordability. The move, which the society is calling Helping Hand, will only apply to first-time buyers who are borrowing 90% or less of the property price and are taking out a 5 or 10-year fixed-rate mortgage. So from reading this, clearly we can see that this scheme is a good thing. It's enabling people to be able to buy their first homes with a 10% deposit. Also, the fact that you'll be able to get 5.5 times your income is fantastic in comparison to, the standard 4 or 4.5%. So this really means that it's going to boost the affordability of a lot of people who maybe based on their salary, they wouldn't have been able to get a home or even the kind of home they wanted to buy. So let's take a deeper look into this mortgage product. So I'm going to start off talking about, the pros, the advantages, the things that everybody's excited about when it comes to this Helping Hand scheme. So first of all, as I've said earlier, it's going to increase, your affordability. It's going to boost how much you can afford when it comes to your first home. So, previously when it comes to like the standard mortgages where they only give you 4 or maximum 4.5 times your income, now being able to get 5.5 times your income could really help you be able to afford maybe even that dream home. You might now be able to go on the open market and actually choose a property that you really want, like your ideal property, as opposed to maybe settling for something just because it's what you can afford.
As well as that, it's also great that you just need to save a 10% deposit, because we all know it's going to be much easier to save a 10% deposit versus, a 15% deposit, for example. As well as that, you're much likely to get better interest rates on your mortgage with a 10% deposit versus maybe saving a 5% deposit.
The second advantage, which is very similar to the first, is basically the idea that maybe you can now afford to get a house rather than just a flat. Maybe your ideal was to get a house, but obviously your affordability limited you to a flat. But now you can expand that, get something bigger, something with more room. We all know that with COVID and us having been in lockdown for over a year, like so many more people valued like bigger spaces, having a garden, things like that. Being able to spread yourself out more in your home, since that's where we spent all of our time in the past year. Well, apart from, a couple of weeks ago when they opened up doors to outdoor restaurants and shops again. And finally, the third advantage or good thing that I've heard about this scheme, according to the Mortgage Finance Gazette, is that first-time buyers using the Helping Hand for enhanced affordability will have access to the standard product range with consistent product rates, fees and features. All first-time buyers will benefit from £500 cashback on completion of their mortgage purchase. So that's really good. So you get £500 on completion of your mortgage purchase, and they're also guaranteeing that basically, you'll be paying the same kind of rates as other mortgage products, even though you're using the Helping Hand scheme. So I think that's really good. Right, so now that we've covered the advantages, the obviously good things about this scheme, because, it is really a good scheme, let's talk about, the cons or things that maybe might take away a bit of the buzz and the excitement about this product, because, everything has terms and conditions. So the first thing is that larger loans will not be available to self-employed applicants. So basically, if you work as a contractor, self-employed in any way, you do temp work, agency work, stuff like that, you won't be able to get this mortgage product. So that is disappointing. So yet again, it's another scheme that doesn't really help self-employed people. But on the other hand, if you're somebody that works a permanent job, this is not going to be an issue for you. The second disadvantage that I see is that basically this mortgage product is only available on a 5 or 10-year fixed rate mortgage. Now, I personally see that as a bit of a disadvantage, because if you're locked into a 5 or 10-year fixed rate mortgage, it's like, what if in 2 years' time you see a better rate come out? You don't have the, the leeway to be able to jump onto that better rate because you're locked into this 5 or 10-year period. Obviously, there's always an option to exit a mortgage product early, but the only thing is that you'll pay early repayment charges, and that's not always ideal. So I just kind of feel like fixed fixing, especially for 10 years, it's just a bit too long, because I feel like, again, like better things may come to market and you won't be able to easily move on to them. So for me personally, I'm on a 2-year fix, and that's coming to an end in October. And I really like it because at the end of the day, at that 2-year period, I can easily refinance without having to think about, oh, I need to pay exit fees to, leave a mortgage early because I want to refinance. And also, as I said, there may just be a better rate out there. The third disadvantage is that Nationwide have said that there is going to be a minimum requirement in terms of like your income level for you to qualify for this mortgage. So they're saying it's going to be around the UK median for how much people get paid in the UK. So if you're a female, it's going to be around £30,000 or £31,000. If you're a male, it's going to be about £35,000. So yeah, if you're earning less than this, you may not actually qualify for this helping hand scheme. The fourth disadvantage is that Nationwide haven't yet disclosed the interest rate to be applied to this mortgage product, but they did say it's going to be higher than the fixed rate that they have on their current 90% mortgages, and this is currently 3.34%. So for me here, the disadvantage is the fact that you don't know what that interest rate is going to look like. Obviously it's going to be higher than 3.34%, but yeah, is it just a case whereby interest rates are going to be quite high to offset the fact that they're giving you this 90% mortgage? Like, I don't know, who knows.
Disadvantage number 5 is that lenders are obliged to check that borrowers can afford the monthly repayments on a rate higher than the standard variable rate they offer, so rather than the mortgage rate that is being signed up for. So that just basically means that even the cheapest deals can be harder to obtain, because really they're assessing you on a rate that's higher than even the standard variable rate, rather than the rate that you're actually applying for.
Disadvantage number 6. Now, this isn't really a disadvantage, but it's just a standard thing that you need to be aware of. So you still need to be able to pass standard affordability checks and also be credit worthy. Like, if you're not credit worthy, you have bad credit, they're unlikely to give you this loan. So as I always say, and more especially for this helping hand scheme, you need to be able to show the lender that basically after all your expenses, your fixed expenses, your leisurely expenses, you can still afford to repay the mortgage. As always, credit and credit history is always important, and so they're going to do a full assessment on your credit score and also any other credit that you owe, so any outstanding credit that you have to pay. They're going to check all of that. Now, disadvantage number 7, Nationwide themselves have said that they have a very prudent policy, and also that they're going to remain within the regulators' rules. And so essentially, Nationwide with their helping hand scheme cannot actually issue more than 15% of mortgages higher than 4.5 times a borrower's income. So yeah, going by that, this mortgage product is obviously not going to be available to every first time buyer. It's going to be very fixed for a very short-term period. From what I can see, 15% of mortgages is not a lot. So if you're keen to get your hands on this mortgage, you definitely want to act fast. Nationwide have also said that they're allowing $1 billion for this scheme. So again, who knows how long that's going to last for. So yeah, act quickly if you know this is something that's of interest to you and you can fit the affordability requirements. Disadvantage number 8 is the fact that this mortgage product is only available to first-time buyers who are taking out a loan of 90% or less. So basically, you need to have that 10% deposit. Now, I don't personally really see this as a disadvantage, because I feel like 10% is a good deposit amount to put down. It kind of ensures that basically, interest that you pay on a mortgage won't be too much. Well, that's what, you tend to see anyway. But the issue arises whereby people that can only save a 5% deposit will be excluded from this product, because, you need to have that 10% deposit as a minimum. Disadvantage number 9 is only applicable to residential purchases. So you cannot use this for a buy-to-let to buy an investment property. Probably a given, probably, yeah, we knew that. But yeah, I just thought I'd call it out because, it's only fair that I do. So guys, that's my breakdown of this new scheme by Nationwide. Now, to round up this video, I'm just going to read a couple extra snippets from that Guardian article. Henry Jordan, the director of mortgages at Nationwide, said, "Nationwide was founded to help people into homes of their own, and that remains the case as much today as it did 135 years ago. In the UK, there are nearly 5 million private rented households, but many of these renters have dreams and aspirations of buying a home of their own. However, with household incomes rising at a slower rate than house prices, many first-time buyers are finding it increasingly hard to get onto the property ladder." So yeah, clearly this scheme is a good thing. It is giving people a helping hand to be able to get their first properties, whereby maybe they wouldn't have been able to afford it before. So yeah, it's definitely a good thing, regardless of some of the limited features or things that are pretty much standard across mortgages anyway. It's still a good scheme. So as I said earlier, if you want a piece of that action, you want to try and get this mortgage for yourself, I definitely say be quick, get in touch with nationwide brokers, speak to them and see what they can do for you. So guys, that brings me to the end of today's video. I hope you found it useful. If you have done, please do give it a thumbs up. Please do also share down in the comments if you have any other pros or cons of this scheme, and also any other video topics that you'd like me to create. So thanks again for watching, and I'll catch you later. Bye.